Good morning, traders. It's the 17th of May. We are Signal Centre Talking Ball. This is the latest instalment. I'm Joe, joined by Steve and Jamie this morning. How are we both doing, gents?
Not too bad, thank you.
Yeah, all
Good.
good, thanks. All good.
Good to hear.
How are you doing, Joe?
Yeah, I'm all right.
Okay.
I'm alive. All right, come on, guys. It's less than a minute in and you're already on me about this.
I'm not saying anything, I'm just saying, how are you?
Okay, I know your game. Yeah, I'm all right, thanks, Steve. Right, before we get any more further down this path, let's move on to latest news, shall we, in the markets and what's moving things on what could be turnaround Tuesday by the looks of things so far. We've got the US New York Manufacturing Index as the latest data point that came out yesterday, and that slid actually very sharply to minus 11.6 for May from a previous 24.6 reading, which is also well below the consensus forecast of plus 16. So that was a pretty huge slump indeed. Despite a slide in the current conditions, companies were overall more optimistic over the outlook, with inflation pressures set to ease slightly. In terms of what's going on in Europe, the EU Commission lowered its 2022 GDP forecasts to 2.7% from 4%, with 2023 growth expected to be 2.3%. The inflation forecast is at 6.1% this year, before a retreat to 2.7% next year. The ECB, however, did voice some concerns. The council member Villeroy stated that the monetary policy expects an active summer and a decisive June meeting. He added that the pace for future developments will depend on actual activity and inflation, but there should be a move at least towards a neutral rate. The risk appetite in markets generally attempted to stabilize yesterday. There was some choppy trading during the Wall Street session, but main indices posted limited net losses and are on the front foot this morning. Today, we've got a latest speech from Federal Reserve Chair Powell. He's due to comment on inflation trends and also the Federal Reserve's policies, so that will be closely watched. In terms of what's going on with the Bank of England, the Governor Bailey stated that the central bank faced its biggest challenge for 25 years and that rising food prices were a major concern, while the current high inflation level was a bad position to be in. In terms of the latest data out of the UK this morning, the headline UK unemployment rate declined to 3.7% in the 3 months to March from 3.8%, and there was a larger than expected increase in employment, which was obviously pretty good. So that's that for the news. We can now get stuck into some charts. Steve, do you want to kick us off this morning?
I certainly will. Why are you bringing up football again, Joe?
Oh, shut up before I put you out of this.
Yeah, you just removed me.
Yeah, I'm in control here.
Okay, let's look at cryptocurrencies. Not as much red on the board as we normally have. Bitcoin. Let's dive into Bitcoin, see what's going on there. Prices have reacted from, well, they've had a slight reaction from the 28,800 level, which we've talked about for months. And we did get a spike lower down to 25,355. That's the next level of support before the 20,000 level in Bitcoin. So a nice little reaction, it looks like, on the weekly chart as well. However, let's take a look at the daily chart. So you can see this reversal formation, not quite a morning star reversal. This bullish candle that should complement morning star reversal failed to really push higher, and we've seen a reversal yesterday, bearish engulfing candle. So really a little bit more pressure on Bitcoin that we have to watch out for. 31,400. We need to get prices above there to satisfy bulls. Otherwise, the bears will be back in town. Similar sort of price action, obviously, in Ethereum, and that has stalled around about the 2,160 level, and that is a major level. If we look back on 24th of January, that day, the low was 2,160. It shows you how these levels historically have been interesting, and prices react from them months later. Ripple, again, same sort of price action. looks pretty glum at the moment. Really, that needs to get maybe above the 46 level before we can relax a little bit, if we can. Obviously, let's dive into the commodities and take a look at gold. Had a bit more of a push higher yesterday. Nice little candle we've got on the daily chart, bullish hammer after the indecision from the day before, and we've pushed up to $1,830. We do have a big band of resistance now. This was previously support. We've pushed through it. We've also taken out the upward trending support line. That will act as resistance if we do challenge that level again. So 1830 initial resistance, 1850 for me is key. There's a few levels above that around about 1860. So it has to work very, very hard to get back onto the right track. I think we've still got a little bit more downside in gold. Levels to watch below 1780 to 1785, and below that we've got 1760, and even 1677, 1680 comes into play if we do manage to crack the 1750 area. So not looking so rosy for gold, although short-term price action is showing signs of a potential bottoming pattern. This could be turned into a little bit of an inverse head and shoulders pattern on a smaller time frame, on the 4-hour time frame. However, oil has really been sort of like the kingpin, the really sort of like the best reaction of the day. The weekly chart, you can see we had this bullish flag formation, this corrective channel. We've broken above the resistance. We've also taken out the horizontal resistance from a couple of weeks ago at 110.30. It was key. I did a video on this yesterday. You can see this on YouTube if you want a little bit more detail on it. But you're pretty much seeing what I talked about. This potential double bottom pattern is still there. It needs to get a break of 115.70. It does look like we're on our way to targeting that. We've had a little bit of a pullback on the day. We flirted with yesterday's highs at 112.55 and made a slightly new high today. A pullback from there. On the 4-hour chart, for me, you've got these potential for double, triple, quadruple bottoms. So yeah, we're sort of seeing a really nice bottoming formation after this exponential rally that we've had in oil. So really looking at this, focusing on this area. Didn't draw that very well, did I? Focus on this area really sort of looks like it's a potential continuation pattern. Not good if you're buying, or if you have to buy oil. That is looking at prices moving up towards the all-time highs around about $150. I think we've got some measured moves of around about $200. I can't remember which formation it is right now, but yeah, doesn't look very clever from if you're sort of like having to rely on oil. You're going to start have to dip into the coffers.
Yeah, absolutely. Is that it from you, Steve?
Yeah, that's it. Yep.
Superb, lovely roundup there. Just in case anybody is interested, Steve did do some alternative analysis on WTI crude yesterday. So that video is actually available on our TradingView streams. So feel free to check that out. He looks into new sentiment as well as the technicals on that. So pretty insightful stuff. Moving on then to FX. Let's start off with the dollar index. As we can see, there was a little bit of a turnaround in this over the last 2 or 3 days or so, having made new highs up here at 105.00. So just a little bit of a retreat. We've got a bit of trend support here around sort of 102.98. Overall, still looks really bullish. And although we've seen a little bit of a reversal, I don't think there's anything to worry about on this just at the moment. Elsewhere, the picture is a little bit unclear. If we go to Euro US dollar, we can see just mirroring the dollar index, but in reverse, we can see this 3 days of corrective move higher. We're into a resistance level here at these previous lows, which comes in at 104.70. So wait and see what sort of reaction we get here. and whether or not we can maybe start to form some sort of bottom over the short term. If we take a look at the riskier currencies like the Aussie, we can see there's been a decent bounce take shape on this one particular, Aussie CAD at 89.07. So just in front of that, we actually saw a bit of a reversal higher. If we take a look at Aussie yen, a lot of these yen currencies look to have formed large top patterns over the last couple of weeks, but at the moment we're overshooting the neckline of this proposed head and shoulders top. So we need to see what sort of reaction we get here, whether or not the bears are going to step back in and send this lower in line with this pattern that we've got drawn on the chart. If we take a look at Aussie versus the US dollar, we can see a decent recovery here. We did a big breakdown of support at 69.67 last week before eventually reversing around 68.25, overshooting what should be resistance today. Again, we'll have to wait and see if the bears step back in to send this lower. Taking a look at Euro versus Oz, again, further evidence of Aussie strength. We rallied into this resistance level here from these previous lows back in February 2021, which we did here in March and again here in May. So this is a pretty stiff level of resistance here and looks to be a pretty important technical level. Potentially, we could be forming a bit of a bottom here, but it's going to take a few more sessions to play out. If we take a look at Euro Sterling, this looked really positive last week, forming this inverse head and shoulders, a nice breakout above the neckline here, and also taking out that downtrend resistance. But then we saw this massive reversal candle on the 12th of May, and since then prices have continued to decline lower. So we've not seen any sort of support come in at the neckline of this inverse head and shoulders pattern. So we're possibly on the way to invalidating this. I'm still prepared to give it a little bit more room. But technically, obviously, it hasn't acted in the most straightforward way, shall we say. If we take a look at Euro Yen, we can see that has dropped into a really important band of support and reacted really nicely, actually. The buyers have stepped back in and we've seen 3 consecutive days of upward momentum there. Potential for this to maybe form a top. Again, it's just further evidence that things are a little bit all over the place on currencies at the moment. And I'll finish up with cable. We can see 3 consecutive days so far of gains have been made. We rallied well in front actually of the 78.6% fib level where we expected prices to get to. So that's on the front foot today, up by 0.72% as things stand. Let's have a look at indices. So I'm going to start off with the DAX. We've got this nice downtrend resistance line here that has continued to cap prices for quite some time, actually, going back to January at the start of this year. And we sort of hovered into that level yesterday and posted a doji candle on the front foot today, up by 0.5% as things stand. But I really want to see it take out this downtrend before I can get any level of excitement about the DAX. So important test upcoming on that, I think. If we take a look at the US indices, they were pretty muted yesterday. We saw a decent bounce from this 50% fib level on the NASDAQ. A nice big green Marubozu candle was formed there on the 13th of May, but a bit of stalling yesterday and unable to engulf all of the losses that we made yesterday. So it's still pretty early in the session, and there is still scope, I think, for a bit of a corrective bounce on this one, but no huge signs of a turnaround on that just yet. And if we look at the S&P 500, I've got this big head and shoulders top pattern drawn on the daily chart. And I annotated that yesterday for the purpose of the gun to the head trade that I did. A little bit aggressive on my stop loss, so got stopped out on that, I think, by a tick, which is a bit disappointing. But this is still very much in play for me. We're into this resistance here of this neckline. Prepared to give it as much room as up to this kind of level, really, 41.06. And still be in favor of this top pattern playing out. So a little bit more work to do there. And that'll be that on the indices for me today.
Just one thing to look at on the dollar index, Joe, or just looking at the more longer term chart, longer term numbers. Yeah. Just looking at these sort of like, where potentially the dollar index can go and how does it relate to, what resistance we've seen historically. And this is obviously a long-term chart, a monthly chart. We can see that the all-time high, 165. Right. This is all the way back in 1985. And then we did have the spike around about the dot-com bubble 2001 to 2002. We saw a really nice double top formation. That is at 120, around about that level. And sort of like we can see how this is built over since 2008, really. Financial crisis, well, obviously we had this liquidity pumped back into the system, and we saw a really nice double bottom, although you got a little bit of they're not exactly low levels, but it does have the same effect, double bottom. That has a projected target of like 112.35. I know it's like you're talking about 12 years later, but this is a long-term chart. These do take time to play out, and we're seeing the same sort of formation really here. Let's just get rid of this one. That's a smaller time frame, with the projected move really up to the 120 level, which is what we saw back in 2001, 2002. So yeah, quite significant, this break higher, if it can manage to hold above this 104 level. That's what the high we saw in 2017. So significant levels for the dollar, and potentially could get a bit of a run on it as well. Although it feels like it's, people are looking for like levels to sell it, or because it's had such a good run. But why would you sell it if it's breaking historical levels? It's not just, you just don't sell it because it's had a decent move.
Nice. Fantastic insight, Steve, there. I mean, that's obviously another reason why people should use multi-time frame analysis as well, because on these videos we tend to get wrapped up in the shorter term views, but by taking a step back and looking at the bigger picture, that looks super bullish, really, doesn't it? And
It
looks like it's going to continue going higher.
Yeah.
Lovely. Thank you.
Interesting.
Jamie, over to you, buddy.
Thank you very much. It's going to probably be a bit of a quick one for me today, because there wasn't too much moving on the stock front yesterday. Let me just put up my screen. Here we go. And also, as a little bit of a side note, my charts have all reset, so we're going to do a lot of drawing together, which will be a fun addition to our analysis. Starting off though with the biggest winners and losers. The biggest winner yesterday was this quite a low price stock. As you can see, it's AgriForce Growing Systems. It was up 65.87% yesterday, and a big surge in volume as well. So that's a nice one to have been involved in. Forge Global Holdings was down 37.74%. It's been very volatile since kind of just after its earnings back in March. It's been very up and down. So down 37.74% on the day. Like I said, there's not a lot going on. There's a lot of inside days, not a lot of volatility compared to what we've had recently. But we will jump into a few anyway. Twitter did catch my eye though. Off the back, I believe this news was Elon Musk he's not backing out of the Twitter deal. I think he wanted to analyze how many bot users were on Twitter. Is that right? How many fake users there were?
Fake accounts there are. They've I think Twitter said there's somewhere in the region of, I think they said 5%, but I think there's probably a lot more than that. Obviously, I think Elon Musk will find out.
Yeah, I think he's doing his own digging into it, isn't he? But that's obviously had this effect on the share price. You can see it gapped up when the Elon Musk purchase looked like it was going forward, and now we've had two gaps down in a row here. And we closed at the low of the session. Yeah, it's a bit of a weird looking chart, this, honestly, having the gap up and then into two gaps down. But yeah, so
that's an abandoned baby, isn't it, Joe? When you get like a gap up and a gap down, isn't it an abandoned baby?
It could be. Doesn't that normally happen at the top though? I mean, is that an island reversal you've got there, where you've got the sort of gap? Is it I think abandon is just one candle, isn't it?
Maybe, yeah.
If
you make that into like a monthly chart or a quarterly chart, it might be one candle.
Yeah, but yeah, not a weird. It's like I say, a very weird looking chart for Twitter. I guess the kind of levels to look for on the lower side of these lows we posted back in February, about $32. It looks like that's where price could be gravitating towards now.
Yeah, and also if it gets down to that $32 level, you haven't got that sort of that Elon Musk opportunity around either. So that was in a clear downtrend before Musk stepped in. I suppose you have got him as a shareholder, so there's always that hope.
Yeah, added element to it, isn't there? Yeah, like you say, it was in this downtrend. And I think before that takeover was announced, it was looking pretty sick, like a lot of these stocks are. But maybe there's a bit of a trend line here. I'm not really sure. It's not great, but if you kind of draw up the,
Yeah,
you've got a little bit of something there. So they might find some support around that level there. 32, we were saying. We'll jump into Jimmy. I did a little bit of drawing on Jimmy earlier. I kind of noticed this is actually something I highlighted in a video of my own the other day. We had this support level at $81, $82, but it's also looking like it's forming a bit of a continuation head and shoulders type pattern, perhaps, where we've got this right shoulder. We have to see it develop, but it looks like we had this support. We had a big influx of buys at this level, actually. You can see the volume spiked up on that day. But it looks like it's stalling out. We had this doji candle on Friday and a bit of a sell-off into Monday's session yesterday. So that looks like it could be heading back towards support. And I don't know, if we kind of play out what this move could be, take the head to the neckline, bring that down there. We're looking back to kind of 34 as a target for that. As I was saying, I'm a little bit skeptical of using them as kind of targets. I like to use the analysis more as looking for good risk-reward opportunities and actually saying, oh, it's head and shoulders, so it's going to go down to $35 or whatever it is. But still, it's worth keeping an eye on. Airbnb we looked at yesterday because of the significant close we had on the weekly time frame. And if my drawing still existed, we'd be able to see this support level, which was broken. And this forms part of a larger channel type formation from the IPO. And yesterday we had more of a sell-off straight into the new week, and lower levels were found, down 5.77%. Not a lot looking great on this right now from a technical perspective. There's a lot of room for downside on it. These are all untested levels. Well, I say untested. It was tested at the back end of last week, but on a longer term, these levels haven't been hit before. So a lot of room to move lower for Airbnb. What else have we got here? Roblox. We've got this. What is this? A gravestone doji type? Let's get this up. Yeah, we've got this gravestone doji candle that's been posted after a bit of a rally. It's kind of in this previous level of what was support, which is now becoming resistance. We had the support here, found it as resistance back here on the 4th of May, and it's run right back into it and formed this gravestone doji, as I say. So negative for sentiment on the short term. We're in this long-term downtrend anyway. Might be able to get some nice trend lines in here. What are we going to kind of draw? Maybe trend lines I always find are a little bit subjective, but you can kind of draw something like that. It's quite clear that we're in this channel downwards, not perhaps perfectly drawn, and it's run into that resistance there as well. The trend line I've just drawn.
Oh, that's
so
great.
Yeah, that's quite that's we look for confluences when we're looking for opportunities. This is a bearish candle. We're in a downtrend. It's at previous resistance level, and it's hit a trend line resistance too. So there's a lot lining up for a potential idea there on Roblox. Might be something to have a look at a bit later. What else have we got? I don't think there's too much. Like I said, it's a lot of kind of indecision candles. This is Apple. A doji candle's been formed. It's also an inside day, and that was kind of the story of the session, really. I mean, there's a lot of red on the board, as you can see, but there wasn't, it's nothing as bad as we've seen the last 3 weeks or so. Upstart still had that gap down last week. It's trying to rally, but it's already struggling. So I think honestly I can think about wrapping that up there. There wasn't a lot to really be developed on what we've already seen. An inside day, so maybe we'll have some more volatility coming if we kind of have this volatility drawdown. But we'll see how it develops. I will leave it there today. A bit of a shorter one from me on the stocks.
Cool, thanks, Jamie. Steve, there's a question for you there, I think.
Thanks. Yes, Pistachio asking, in cases where news or external events have an impact on a chart, such as with Twitter, how useful is TA in these times? It's like any analysis. We talk about technical analysis, macro analysis, fundamental analysis, sentiment analysis. It's all the same. For us, technicals includes everything that is known at that point, and that's what we draw our charts and lines and everything from. and it takes into consideration everything that is known, just like fundamentals does. So when you do get some news coming out which affects a market or a stock that has an impact, that's not known, so it will have a reaction. And nothing, you can't gauge for anything. There's always that unknown out there that's going to impact on price action and prices. For us, it's more about what happens after that news event, and really sort of what we tend to find is that price action generally gives you an idea of where obviously the supply and demand is coming, or where there is a trend coming from, and it tends to line up with those news events as well. So I don't know if I waffled enough through that, but it's really that, you know, technical analysis takes into account everything that is known, and then we will look for the next move.
There's not much you can do about news bombs, is there?
Yeah, exactly. You'll sort of like get, you know, if we look back at 2001, the sort of like the Twin Towers, no one could foresee that, not even the fundamentals. But what you do, technicals will very quickly give you a level, a next level of support, a next level of resistance, and it will create that formation that's forming, because these news events will come and go, and you know, the price will sort of like continue forever, apart from if you're Luna or Terra. So that's a little bit of a joke about the cryptocurrencies. That's a story which is still going on in the background. People are still trying to buy it, and yeah, God knows why. Stop buying it. Stop wasting your money. It's zero. But thanks for that question.
Yeah, definitely.
Sorry, can I just add on to that? I think even it's not just technical analysis that gets affected by external events and news. If you kind of look at the GameStop and what happened with those short squeezes, for an example, all the fundamentals were very negative on that going into it. And that was the whole point of what happened with Wall Street Bets, is they picked a stock that had really bad fundamentals and they targeted it because there was a lot of short interest on it. So
yeah,
it's not just technicals that get caught out by news. Like, news is always going to happen. There's always going to be something that's unexpected. And that's why it's so important you've got your risk management in place, so that when something does happen, you're not going to blow up your account straight away. You know, you want to have those measures in place to protect yourself against these unexpected events.
Yeah, it's like I do get fed up with people saying, oh, you know, the sort of like, you got that when news events come out, technicals are useless. They're not. It's like looking for the next level. So we could very quickly show you where the next point of value will probably be. Whereas if you're a fundamental trader, you won't have a clue if you didn't use charts. So, you know, a lot of fundamental traders will diss technicals. I won't diss any analysis, because I do believe that if you combine some analysis, you can get very valuable insights, especially like I did have a look at the video on the YouTube channel. I do talk about news sentiment analysis. You know, fundamental news sentiment, macro, everything like that is important. And, you know, I think if you combine it, it can be very, very powerful. That's it.
Cool. Thanks, guys. Okay, let's take a quick look at the gun to the head trade. So this is a little challenge we do each day on the videos. We pick a trade live on the call, and we must have a stop and a target. Of course, it needs to be risk management associated with all these trade ideas that we talk about. The ideas are placed at market, and the ideas will expire at 9 p.m. UK time, or when the stop or the target is hit. So yesterday we picked 3 trades. We were all selling indices yesterday, and not a lot happened with those. So it was a pretty choppy day all in all, which meant that we didn't have the greatest of starts to the week. S&P was stopped out. High of the day was actually 40.47, which was frustrating, but you know, we're an honest bunch, so I was stopped out on that. Nasdaq we were stopped out on as well, and Jamie managed to hold on to a small loss of 0.56%. So could have been worse. So let's go again today, gents. What does everybody fancy?
I don't know if we were just a day. Were we 24 hours early? And is this sort of like, is it going to happen today? This like, I don't know.
Maybe.
I think we were a little bit early on the selling stock.
So. There was no volatility really yesterday, was there? Which didn't help. So this was my S&P trade from yesterday. As I mentioned, it was a that head and shoulders top that I was looking at. That was the high of the day, which was also my stop loss. So that was a tad unfortunate, but that's the way things go. But today I've actually got one lined up on Euro US dollar. This looks really good actually on an intraday basis. So this is the hourly chart. And as we can see here, we've got this previous low from the 28th of April drawn by the red line. And we've rallied into that this morning and posted a bit of a shooting star into that. We've also got a 38.2% fib level in blue from these highs here that we posted on the 5th of May. So I really like this level to be selling into. I'm going to be quite aggressive with a stop loss and actually place it above the highs of the session. So it's only a 16 tick stop loss, and I'm going to target a move back to these swing lows. So my trade for today is to sell Euro US dollar at 104.61. I'm going to target a move down to 103.54, have a stop loss at 104.77, which is a 6.76 R return.
Boom.
If it plays out.
Very nice.
So, yeah, good luck if you're following that. Who wants to go next?
Well,
Steve?
Don't rush, lads.
I'm struggling.
I am okay. I'll have a look at mine, and I'll give you the reasons why I am struggling a bit as well here. So, looking at the 4-hour chart on the Nasdaq, for instance, this for me screams a potential inverse head and shoulders formation, and it looks like a pretty decent one. That looks pretty decent, but it's very much. Let me just get. Pretty much it needs to break the neckline. That's the key to it, and it hasn't broken the neckline yet. So I would like to wait to see what happens when we retest this neckline. If we do get a break above it, I think this has got great potential for a corrective rally. However, right at this point in time, it hasn't broke above it. So what am I going to do? I think I've got to sell it. I'm going to go with it. I feel like turnaround Tuesday. Joe, you called it turnaround Tuesday on the trading floor way back in the day. That was always.
I was talking about turnaround to the upside, though.
Yeah, I know, but I talked about this the other week. I said turnaround Tuesday, and it did turn around to the upside as well. But then it did turn around later on and went down. So, yeah, I mean, I feel like this is like pretty high risk, really. Let me see where are we? 2000. Can I put the stop there? Yeah, I'm going to put the stop there because that'll give me nice little round numbers to target. So I'm going to sell Nasdaq at current levels 12,300 and 363, targeting a move to 11,763 with a stop at 12,563. So I've got a 200-point stop. It feels like it should be enough in Nasdaq, but as I say, I'd probably would like to wait till the US opens and see how if we retest this neckline. But yeah, we've got to make a call now. So that's it.
Good luck, Jamie. Over to you, buddy.
Thank you. I have found something that I can go with today. I'm looking at copper. We have this 50% retracement from this downward move we've had. It's also running into a previous resistance that we have marked here in red. And that's good enough for me, honestly. It looks like it's turning around as well. We've kind of price is stalled up here. We're going to try and set it. Can't get as good a risk as I wanted. We're not going to... Do we target the lows? I think we could target the lows, couldn't we? That would be... It's kind of crazy, but maybe...
Do it.
Let's do it. We'll go... Wow, look at that. We're going to go for this, which is selling at 421.7. That's a really well constructed sentence. 4.217. Our take profit will be at 4.037, and our stop loss will be at 4.244, which gives us this 6.67 risk reward. That would be a real nice one if it did come through. We'll have to wait and see.
Nice one, Jamie. So all these ideas are going to be published onto our TradingView profile. So if anybody wants to check them out, you can see them there. They're all time-stamped, and you can track how they do throughout the trading session. Just about to publish my one now. and off it goes. So you'll be able to see them here. Joe's gun to the head trade selling euro US dollar, and you'll see the other guys there shortly. Okay, data wise today, we've got US retail sales later on. That's at 1:30 UK time. We then have the Fed Chair Jerome Powell speaking at 7 o'clock. He will be addressing the inflation situation in the US as well as general commentary around the economy and monetary policy. And early in the morning tomorrow, prior to us coming on the Talking Bull podcast, we will have the UK consumer prices. So the latest read on inflation in the UK, which will of course be well watched. Yeah, that is tomorrow. Yes, latest read on consumer prices. And then we have on the 19th, the Australian jobs number, which won't be as important for us based in the UK, but still might create some volatility. Anything to add, gents?
No, good here.
No,
Cool.
good from me.
Perfect. We'll wrap it up there then. Have a great day, everybody, and we'll be back tomorrow.
Cheers.
Goodbye.